All right, so I got another great one for you today for everyone that follows and watches the video content here. And maybe you're part of the Discord community. And if you're not, go ahead and join by clicking the Discord link down in the description portion of the video. Yes, it is free of charge to join. Free. Yes, it is. Come over and join us on the channel. We are on the trading floor. That's where we not 5 days out of the week, unless it's a holiday, are trading the New York session. Some of us trade the pre-market like myself. Some people actually trade during the overnight session as well. But if you are a first-time viewer and part of the channel today or watching, make sure to please go ahead and subscribe, like the channel by clicking the thumbs up button, and make sure to share the video content with your friends and family or whoever else, your work colleagues that may be interested or who has interest in trading the future markets, okay? So if you're someone that's on that path to wanting to learn or educate yourself on how to trade futures, you found the right channel because I trade a specific type of way surrounding supply and demand. Now, you may be saying, well, why is he using range charts? Because those are the charts I use. I've been using them for years since the beginning, and I'm comfortable trading because they're easy to trade. They're not complex. You can see the momentum coming and going, entering the market at any key level or zone of interest that you may have. Supply and demand is where it's at. Why? Because we can actually see where the banks and the institutions are most times, if not all, are taking positions or entering the market or selling, whether it's buying or selling. Today, I want to talk to you about buying and selling future contracts, okay? A very simple way and showing you how you can make just $400 per trade. Yes, per trade, trading one E-mini contract in less than 5 minutes. I did it yesterday. I'm going to show you a sweet setup. I did it again today. And I want to say this right now. Anyone out there who's struggling, trying to find their edge or way within the future markets. For me, I trade the NASDAQ futures. I really started trading in the ES, which is the E-mini S&P 500, but it's been moving so slow. Now, I switched over to trade the NASDAQ a couple years ago, and I just like the volatility. I like how, the movement in it, and I know a lot of you probably thinking like, man, that thing moves like a Lamborghini or a Ferrari. It's just so fast, I can't wrap my mind around it, and that's okay. There are other markets within the future markets or trading futures in which you can actually trade at a slower pace or be able to read the market looking at the charts at a slower pace, like the ES, all right? I'm going to say that right now. Gold also as well. There are some great markets out there that do not have all that volatility where they're just pushing and pulling very quick. The NASDAQ, the reason why I like trading is because there is plenty of opportunities, plenty of setups. You're going to at least get 2-3 setups a day in most instances, okay? Now, my goal is to really capture and get into 1 to 2 quality setups a day. If I make my, whatever my goal is on a daily basis, within one trade, I'm done. Why? Because that's part of my trading plan. Now, without further ado, let me go ahead and start talking about, what do you need to look for, or what should you be doing when you're buying and selling future contracts? It's very simple, all right? A lot of people like to enter into the market by simply clicking a market buy, okay, or sell market button. I never enter the market that way. When I say never, I mean I never enter by hitting the market button. Why? Either buying or selling. Because there's so much slippage involved. By the time you hit buy market, okay, at one of your maybe demand zones or supply zones, your zone of interest, whatever it may be, the market may have already jumped up, all right? So let's say the market got back to a demand zone. You hit buy market. You're trying to get in at a price level in which you want to trade it, but by the time you've done that or do that, the market may have jumped up several ticks or even several points. I always enter the market either hitting, most times, if not probably like 98% of the time, buy bid when going long and sell ask when going short. I'm saying that. I'm telling you, I'll say it again. When I go long, I click buy bid or sell ask if I'm going short. Why? Because I can get into and place a limit order where I want to get in at. And I don't have to worry about the slippage because I'm simply waiting for the market to come back to my price level to where I want to enter the market and where I'm comfortable at. I do not engage in hitting market, buy or market sell. All right. Now, there's also another way in which you can do it. You may incur a little bit of slippage from time to time, but it's a whole lot better than trading and clicking on that market buy or market sell button. Okay, if you trade that way, that's okay. Everybody has their own style and way of trading. I prefer to trade and wait for the market to come back to me. Now, by simply you could either go, like I said, buy bid if you can't, or if you say, I want to get in right now, and you're a little bit anxious, then click buy ask, okay? All right? And then on the flip side of that, if you're looking to sell, okay, you're going to get the best price if you go sell ask. But if you're a little bit, like I said, anxious to getting in, and you say, I want to get in right now, then hit sell bid, okay? That's still going to give you a better price entry point, all right, into a better position than clicking sell market or buy market. I'm telling you right now, all right? I'm going to show you how to do that, either, if you're trading the Dome, Super Dome, or like I do the chart trader. It's very, very simple to do so. And I'm going to show you a setup that I took yesterday, in which, just in a matter of less than 5 minutes, I was able to make over, just say $400 just trading one contract. I want to show you how you can do this. It's not about what I made. It's about what you can make. It's about what you should be setting goals for, and how you can do the same thing. It all surrounds, like, again, supply and demand, but you always want to start off by understanding structure within the market. Do you know what that is? Structure is where the market is making higher highs or higher lows, or making lower lows and lower highs. There's times and pivoting points in the market where it may transition. For example, like right here, where we had a very bullish market, as you can see here, highs, lows, higher highs, okay, higher lows here. As long as we're making higher lows in the market, and then we're breaking a high, then we're moving to the upside, okay? And you should only be looking for bullish demand zones to trade going long. And then if we get a pivoting point, this is where the market will shift at, where it's made its final descent to making a high, and then it makes its first low where it's breaking below structure right here, below this low right here, makes its first low. Then this is the catch, where it makes a lower high at, and the market struggles to break above the most recent high right here, and then we get a new low. This is a breaker structure right here, but this is a low probability area of structure right here, or low probability. Well, this is actually a supply zone right here, but the market breaks right through it. Then it comes back down right here, as you can see. All right, pulls back, and we break structure going lower. This would be a beautiful pullback to a key area of supply. So the market actually pivoted and transitioned from bullish to bearish. Let me show you. Squeeze this back in. Bullish to bearish when it broke that area structure and broke this area right here, coming down, where we made this low, lower high, and broke structure below this low right here. Okay, so now we are bearish to the downside. You should be looking for pullbacks to go short. So that's why yesterday, which was, no, actually not yesterday, it was the July the 16th, which was Wednesday. This was a beautiful area to go short from. Now, am I going short directly from my higher range chart? No, I'm not. I'm going to mark up that zone, and then I'm going to move down to my lower base 24 range chart to look for an opportunity to go short. I'm going to show you here in a second how you can do this, just trading one E-mini contract and make $400 real quick within 5 minutes. Simple, very simple. All right. So I would be looking to sell one futures contract. All right. And how do I go about doing that? I'm going to show you right now for all those that maybe first time users of NinjaTrader and saying and don't quite understand, the market buy, market sell, or the buy bid, buy ask, all those type buttons right there. The best way, I'm telling you now, this is the way I do it. It's my recommendation, but you don't have to if you don't want to. If you choose to just get into the market real quick and want to hit that buy market or sell market button, that is totally up to you. All right, totally up to you. All right. Now let me show you right quick. All you need to do is just go up to the top here, where it says chart trader, and then you want to hit chart trader right there. Okay. Now, what you want to do is make sure that you have your order quantity right of one contract. And then, you want to, if you're looking to sell, okay, I'm going to show you in a second. We want to hit sell, either sell, ask, or sell bid. The best opportunity to put it in and again, get executed at your price level at the point in which you want to enter the market, then you hit sell, ask. I never hit these two right here, buy market or sell market. It's either going to be very conservative. I'm going to hit sell, ask, or buy bid. Or if I'm a little bit more aggressive on the sell side, I'll go sell bid. May give me a little bit of slippage, but it's going to be nowhere near as much as hitting sell market. Same thing on the flip side. If I'm a little bit more aggressive, I'll go buy ask, okay, versus buy market. Still maybe a little bit of slippage, but buy market is going to give me probably more than a whole lot of slippage that I really want to. Because what I'm trying to say is, by the time you hit buy market or sell market, you will see that you're probably already immediately going to be in drawdown. Honestly, okay. By getting in on a limit order of buy bid, buy ask, sell bid, sell ask, that's going to again, get you in the price level in which you want to be in at, and then you don't have to worry about all that slippage and being as much or incurring as much drawdown. Okay, so hopefully that helps. Now, what I want to show you this right here is, let me show you right quick. We'll go down to the lower base chart. So you see, I have my higher base chart, my higher range chart zone marked up. We're bearish to the downside. Lots of selling. So we're looking for a aggressive selling to the downside. That is supply. Okay. Yes, there's also supply right here at the zone. But one thing for sure you really have to pay attention to is this right here. Okay, we got aggressive selling here, but I always tell people, what is above you? Is there other areas in which the market could actually go up to further up? Think about it like this. Would you rather trade back toward a low of something or back up towards maybe, you know, the mid area, the 50% or above? I would want to trade back up where the move started from, where it started pushing to the downside around this area, which means that I would be interested more so in this zone right here with this aggressive selling versus this one right here, which is at the latter portion of it. Also, I like using the volume profile. I'll draw up using it from here to here. And what I can see is that there is more volume right in this area back up where this zone is right here than in this area right here. Yeah, there's if you look at the peaks and valleys here, less volume than right here. Okay. All right. So to me, I like to trade where the market is a little bit higher up. And I always talk about this too. I say, okay, if you have a zone above another zone or a zone below another zone, and there's imbalance or gaps that need to be filled in, be very mindful. You see how the market reacted here very shortly? That's because they were trying to go up and fill what? Areas above to where they can feel those imbalances resting back at the upside. And, you know, also what you may want to be looking at too, okay, so well, when the market got right here, what was here over here to the left hand side? That was a aggressive area buying there, a demand zone there. So they may want to push up, reject off of that. It's a unmitigated, okay, high probability demand zone. So they may want to continue pushing higher and test this area here. Even if you look out even further out, maybe even on a higher range chart like a 240 or something like that, maybe even higher than that, you'll see right here. What are they bouncing off right here? Another demand zone, aggressive buying to the upside. So, you know, it makes sense that they would want to come up here and test this area up here, okay, up in this area here, versus down here, because that's where we're basically at. When we move down and look at it on the 120, let's see right here, you see this area right here, we're tapping into this area of supply right here. That is what it is on the higher range charts if we go out further than a 120. So I'm more interested right here because we just tap demand on the 240, say for example, or even on a 120, which I use a lot right here. It tapped a demand zone. I think we actually we actually tapped right off of it. It grabbed liquidity. Well, it didn't even grab. Yeah, it did. Swipe right below it and then push right back up. So it basically rejected off this area of demand right here, even here. Okay, but you're definitely rejecting off this major area of demand here on the 240. And if you probably go out even further than that, there's probably a demand area here as well. I'm just saying, be mindful of what's going on the higher base charts as well. So when the market reacted off here, it's probably going to go up here and want to fill some higher areas. Okay, where this imbalance is, all right, scaling down, where there's some imbalance resting above here and up here. All right, so this would be a beautiful area to actually look for an opportunity to go short from. So when I move down to my lower base chart, that larger box there, that's the 120 range supply zone there, okay, which was right here. I'll mark it up first, and it's high probability. From there, all you really want to do is look for opportunity where the market starts to show you bearish momentum and creates breaks of structures coming lower. Push lower here. All right, we broke structure right here. Okay, so we made a first low, lower high, and broke structure down below here. So we got lower high, broke structure below this area here. Nice area of supply right here. Now we're moving in the direction of what? The higher time frame, or with the lower time frame. So higher time frames bearish, lower time frames bearish. We got a beautiful area of supply right here on the lower time frame just as well. Even if I pull the, say for example, like the volume profile. Let's see here. Oops, sorry about that. Let me erase this. Okay, 1 second. You can see, let me do this right quick, that the market pulls back to this high volume area. Right above it, we have that area of supply right there, which is high probability on the lower range chart. I'm going to go short from there. And then right after that, there was another one right here that the market tapped into right here. Okay. There's your high volume area right there. It comes back, taps the high volume area, and then it rejects it and pushes even lower. So if I erase these, you can see both of these lower range supply zones right here. Okay, both of them aggressive selling, moving in the direction with the overall higher time frame. So then we have the supply zone resting right here on the 120 as well. We have a supply zone here. You can see it on the 240 and these two here on the 24 range. Okay, I don't talk about the 240 range chart too much, but you know, you can use whatever you want to use in moving out further and looking at higher base zones or higher range charts, because you know, some people use different range charts. I've been noticing nothing wrong with that. You have to find your own edge. I like that you look at the 240. If I want to look out further than that, then I'll look at something else. But the 240, 120, and 24, those are some of the charts that I use. And again, even here, it bounced off of these demand zones right here, the 120. It bounced off of this demand zone right here off of the 240, and that's the reason why, okay, it went up and it looked for higher areas as it was moving higher. So hopefully that makes sense. I really hope that makes sense. But this is how you do it. So on the lower range charts, if I get into this trade here, I'm going to get in here at, say, 23,000, say 43 or 44 right there, right? I'm going to aim for them to take this low out. That's going to give me more than 20 points move right there, and that's all I need on one contract to make that $400. And if you notice here, it comes back up here, rejects it, comes all the way back down. So that's around about what time? 9:37, we'll say that, and then it comes back down here, clears it out in less than a minute. Okay, so less than 5 minutes, you can quickly make $400 trading one contract. All right, going short. All right, I just showed you how to do it. You can either go sell ask or sell bid. Please, I'm telling you right now, if you hit sell market, unless you really want to kind of you know, get in wherever the price is at that current time, you're definitely gonna catch some slippage there. But again, limit orders work best for me. If you can't get in, say for example, you hit sell ask and the market starts to kind of move away from you, then you can hit sell bid, and it will pretty much almost fill you at where the price is at. So I'm just trying to give you that piece of advice and let everyone know out there. This is how I buy and sell future contracts each and every day. All right, I never hit buy market or sell market. Okay, so hopefully that makes sense. Now I want to say this. There is a great community which is private to anyone that wants to join it. All right, very inexpensive, but what it is this opportunity for, you know, traders like yourself who are trying to maybe possibly gather some insight, find a great strategy, you know, understand setups, surrounding market structure. I cover a lot of content in this private community surrounding my trades. Okay, I break them down as detailed as possible, and everyone that's part of that community, whether you're an elite member or ultra elite member, thank you for supporting the channel here, because you're supporting the channel is what you're doing in my efforts as not only as a trader but as a content creator, but more so a trader, because I'm providing you relative information, knowledgeable facts, just trying to push as much information out there and show people a way that systematically works if they really put the time in. Structure is the core concept of what you really need to understand. You got to understand, you know, the market and how it's moving and shifting. Is it making higher highs and higher lows? Why would you be going short if the market is making, you know, going to the upside? It doesn't make any sense unless you've got something above you like a major area of supply, which is rejected off of a higher range chart, or a major area of demand, you know, coming to the downside looking to go long. You got to understand things like that. And that's what I do in this private community, is that I break down the trades. There's videos. I mean, there's tons of video content there surrounding trade breakdowns. These are the same trades that I post over on the Discord community. All right, on the trading floor, I go back and I break them down for the elite members. I go back and I break them down for the ultra elite members, so that you can grasp an understanding of the setups. I walk you through structure. I walk you through my mindset of why I took that trade. I'll let you know where you place where the stop loss should be placed at, where to place your profit targets. I talk about it all. But you also get the video playlist and a great video. One of the biggest perks is the great video that I cover surrounding market structure for anyone that's struggling with that. That's what you get for just becoming an elite member. Now, if you want to become an ultra elite member, guess what? You receive everything that I just discussed, plus my live recorded trading sessions and the market recap videos. Okay. And when I say it's very inexpensive, it definitely is. I'm telling you that now, in comparison to you going out here and paying hundreds or thousands of dollars to someone else's, you know, program or system that may not work. And I'm not sitting here and tooting my horn and trying to say that what I have to share is 100% going to work for everybody, because look, we all have to fight the demons. And when it comes to trading, and it's one of the hardest things I ever try to accomplished in life, and I have, but it took me some time. My first 2 years, I wasn't profitable because I failed to understand market structure. I'm telling you that right now. But there's also things or areas surrounding trading that a lot of people will struggle with too. It's the psychology piece, wanting to overtrade, wanting to get back in and revenge trade when they take a loss or two, trying to make their money back up, and then they get through that, go into that vicious cycle of overtrading. All right, and that leads to doing what? Blowing accounts. You don't want to do that. Set up a trading plan for yourself. Okay, I'm telling you guys, I'm providing you information that you need to know. So if you want to join and become an elite or an ultra elite member and gain access to all that great content that should help you out in your own personal trading, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click on that, give it a couple seconds, 3 tiers will pop up, and you will see the last 2 tiers, which is the elite and the ultra elite supporter tier. You can join either one, but what you'll really see is the perks and rewards, as I just discussed. You'll see them listed, and that's what you're going to receive depending on the tier that you actually join, all right? Outside of that, if you haven't taken the time to subscribe through all this, chitter chatter and information I had to supply, make sure to click that sub button down below. Also, click the post notification bell so that you never miss any of the uploaded content here on the channel. But last but not least, you already know what I'm going to say. Click that like button if you found some value in today's video. Take care, and I'll see everyone in the next one.